Hey, it's Mac with PriceActionTradingSystem.com, and it's Wednesday. It's December 11th. This will be our chart lesson for today. And you can see we had an uptrend day today. We did back off the highs before the close, so market is closed now. It's a little after 4 o'clock, and we didn't quite make a new high. Will we get some follow through tomorrow? We'll see. We're very near the upside of this trend channel if I have this correct, which I think I do, just based on the overall look at the chart. I believe this to be correct, but we're certainly not oversold right now. We won't be oversold until we get or overbought. Let me correct myself there. We're not overbought yet. We won't be till we get up into this upper band here. So there's still room to the upside as far as the bands here, and it looks like there's still a little room even inside the channel. So we'll see what tomorrow brings. If we're getting more follow through buying, but the market tends to obviously like uh, the news the last couple of days. We had some more news this morning, and the market seems to have liked it again. So anyway, the market did rally on that. So, but let's flip over to the 2,000 tick chart and take a look at that, and we'll work through our trades. Okay, here's our chart at a high level. You can see we had this spike up on the CPI news this morning. This is all economic driven with as far as has to do with our inflation and so forth. And so we spiked up on that, went into this steeper channel, which is a little steeper than what you'd like to see. And then this one's a little flatter, but we stayed in the upper half of it most of the afternoon. So fairly strong trend. This is more sideways stuff, but the trend is still up. The trend was up until lunchtime. And then from there we dropped off a little and went sideways, and then we sold off some in after the 2:30 hour. So but for the most part, the trend was up most of this trading day, up or sideways. So not a lot of trades today. There weren't very many setups, but overall it was a good trading day. And the future trades we did have here were a couple of them were decent trades, but there's just not many of them, so it won't take long to go through these today. But anyway, earlier I believe I had this a little steeper, and it didn't quite work out. And come to find out, the trend did continue, but it was a little flatter than what I originally had it during the first one I put out this morning. So I think I'd started from down here and worked through, but it didn't quite work out. So then you redraw it when you get another opportunity, and that's what I did, and this is what I ended up with as the day progressed. So hopefully yours look similar to this. If not, hopefully you got to the same conclusions. That's one thing I tell people. Your chart does not have to look exactly like mine, but it should be close, and you should get to the same conclusions. So that's the main thing. Every now and then somebody will send me their chart. It looks slightly different to mine, but you get the same exact conclusions, and that's all that really matters. So as long as you get the same conclusions, uh, then we're probably okay, even if yours is not exactly like mine. Uh, it's amazing though how many times people send me their chart. I mean, it's identical. You could overlay mine over theirs or theirs over mine, and they look exactly the same. And that tells me that we're all on the same page, and we're on to something, and that not just I'm seeing it, but students are seeing as well, and that's always a good thing. So, but real quickly before we get into the chart lesson, I wanted to discuss our upcoming Christmas holiday. I'm going to work. There's only well, today's Wednesday, so we've got tomorrow for chart lessons, and this week, and I'll work tomorrow and Friday. I'll probably leave at lunch Friday, and then the following week, I have not 100% made up my mind yet, but I'm probably going to work at least through Wednesday and maybe work Thursday too. So we may get a full week next week, and I'll probably take that Friday off, and then I'll take the rest of the year off into January 1st, and I'll be back in the office on January 2nd. So that's kind of the plan at this point. I'll update you more next week on how my week will actually play out next week, but I'm thinking I'm going to work at least through Wednesday, maybe even work Thursday, But most likely just take off Friday and start my holiday on Friday, and then take that whole week of Christmas off, and then through January 1st, and then I'll come back on January 2nd. So that's kind of the plan as of right now. I'll I'll update you next week as we get into the week and as we get closer to that date. But just be thinking about that. And let's get to the chart lesson here. You can see this again. You can see the spike up, the steeper channel that folded over into the larger, flatter channel. And of course, draw these short-term, more micro channels too, because they help keep you on the right side. If you look, not almost all of them play out. Uh, you get a move up, a break outside, a move to a new high, move down, close outside, new low, move up, close outside, new high, move down, close outside, new low, move up, close outside, new high. This one you got to move down, you didn't get the close and new low. This one you didn't either. Here you're moving down, close outside, new low, moving up, close outside, new high, moving down, close outside, and you made a triple test there instead. It still didn't go very far. But if you draw these, they help keep you on the right side of the chart, basically, is what I'm trying to tell you. It gives you a little help on staying on the right side of the market. So it's a shame we couldn't catch any of this early this morning, but it just went so fast and furious, there just really wasn't a chance to or an opportunity to enter it. There's one possibility here. Notice this is basically a double bottom. We get this spike up, then you get a first entry, second entry. That fails. So that's a continuation pattern, a failure. But normally you want to see this at the EMA, but this was there was very high momentum here. So it's probably going to act like one, but there's not much room to the top there either. So you could argue for that to at least be green, but I just, it's risky and you're taking a big chance. And generally you'll get something fairly quickly soon thereafter. Unfortunately, today it was a little bit, it was almost another hour before you got a setup. So it's just one of those days. There just weren't a lot of setups. The market's going higher, and but it's just not giving you a chance to get in it without doing something risky. And you never want to do anything risky because you'd rather miss a trade than take a loser. And no trade is better than a losing trade. And sometimes by following the rules, you're going to miss a good trade, but you still did the right thing because you followed the rules. And if you do that consistently, you're going to make money. Yeah, you might miss a trade every now and then. You might miss a really good trade. And that's what really messes up young traders. They miss a great trade, and then they see it again. They miss another trade, and they say, by golly, if that happens again, I'm not missing the next one. And they push a trade on the next one, and guess what? It's a loser. I see it happen over. It happened to me when I was a young trader. So I know exactly what's going through your mind. I know exactly how you're feeling. But honestly, if you want to be a successful trader, you have to be able to get all that out of your head and say, I'm following the rules. I'm being a disciplined trader. I don't care what happens after the trade, as long as I did the right thing. If it goes on to move 100 points straight up, if it wasn't a good trade, I did the right thing. And that's long term is going to make me a winning trader. So I hope that makes sense for you. And it's difficult. It's very difficult. It's what makes trading hard. Fear and greed, fear and greed, fear and greed. That's one of the one things I agree with that go way back in trading is that what drives traders is fear and greed, fear and greed. And you have to be able to eliminate fear and you eliminate greed. And if you can do that successfully and learn to understand the chart movements and price movements and how to read this chart, it's going to change your life forever. But you've got to be able to get rid of that fear and that greed, and you've got to learn to read the chart, and you've got to learn to follow the rules. Disciplined while eliminating fear and greed, that's the key. And so if you don't learn anything else from me, remember that he's telling you those things. Eliminate the fear and greed and learn to be disciplined and follow the rules, and you're gonna be a different trader just on that alone. And then once you can master reading this chart, then the things are really going to pop for you. So try to stay disciplined, try to follow the rules at all times. Don't force trades, don't push trades. No trade is better than a losing trade. And watching the market go straight up 100 points without you is difficult, but it shouldn't bother you if you follow the rules and there wasn't a setup. So keep that in mind. But anyway, let's get to the chart lesson. 7 o'clock, we usually start about 7 o'clock. It's usually safe to start trading around then. Today we had the news at 7:30, so you had to be out by 7:15, so there really wasn't any setup prior to the news coming out. And you can see this big spike up on the CPI news. Well, that led to the rally. I've got a spike in channel here, and you really had to kind of sit tight till about 7:35, 7 something like that, 7:35 or so. And notice again, you get a spike up and a first entry short and a second entry short. So that's a failure. Maybe you take that. I talked about it a moment ago. Let me zoom in here a little more. It's risky, but there is a lot of momentum there. And so maybe you take that trade. But it turns out to be a fairly decent trade. You might have even got a runner on this. And then it runs up here. And we try to go. You're just kind of working sideways there, and it pushes up one more time, and then that tends to be the upper side of the trend channel, and it runs down. That's just the first entry there. I think again, it's a little risky entering there. We are close to the EMA here. It's just a first entry. That's the problem. So it's not a failure. It's not. I mean, you could say, okay, there's a new low here, but it's not really a new low. It's still part of the original move, and so you can't really justify a failure or anything like that. It's just a first entry, and it's a bigger bar. It's not. I mean, honestly, it's not that big. It's 11 ticks, but on a day where your ATR is lower, it seems rather large. So, and then of course we run up here and um, make a new high and come back, and you get another first entry, but no setup, no signal bar, no nothing. It just goes higher. Now you do get a new low here, and I think you can justify this as a failure and a continuation pattern. You do have to go long at the very high of the day, but this, notice how you're getting all these little bars with stems and small, they like small dojis and small bodies and lots of stem, and the corrections are getting real shallow right here. That means you got a strong trend going on here. So I think you're safe to take that. Normally I'd say don't go long at the high of the day, but you've clearly confirmed this trend line. It's holding, and you got a continuation pattern there on a failed second entry short. You're going to at least probably get a scalp out of that, and it may run on. And this does really, again, push off pretty strongly before it goes sideways. I wanted to point out a trade right here, and I notice you got a new high, and you get a first entry, it comes back to the trend line, you get a second entry there, but you got to go long right into those highs, and there's not room to scalp out there. It has been a fairly strong trend, but you can clearly see we're working sideways now. We're not taking off again like we were, and so you have to pretty much skip that, um, and you end up getting a break here. I wouldn't go short yet. I wouldn't even think about going short yet. You do get a triple test here. Maybe there's enough room to go short there. But see, there's not even enough room, and it would have been a one tick failure. So you just really don't want to go short yet. It looks like we're going to get a triple test here and a chance to go long, but it doesn't break higher. Then you get an inside bar. So you really get two inside bars in a row. And even though it takes off, I can't justify entering on that bar. It does make a 2-bar matching low there, and it is off a possible another trend line, but it hadn't been confirmed yet. So I think you're just playing the range here, and I just don't think you can take that trade. It takes off and turns out to be a really great trade, but it's just not worth taking. But notice you get a close outside on this green. When you run to a new high now, you clearly get two legs up. You make one more push, but you got to close outside and move to a new high, all in one move. And it actually breaks higher and fails and turns down. You're way away from the EMA. Maybe you take that one and ride it back to the EMA. You probably want to wait. With all this momentum, you probably want to wait on a lower high. But if you took that one just like it is, I'd be okay with it because there's a good chance if you're right that you're going to get more than a scalp out of it. And you can see that would have happened here. It turns out to be a pretty good move down. You got this channel working down. This is actually a little wider here. And you close outside a couple of swings to a new low, and it bounces again. But we're not back to this trend line yet, so I think it's a little early to try to go long on the signal bars probably closes in the upper third, but I would wait. I would wait and see if you get something better than that. You get a higher low here, but it's not a good setup. It's just some sideways stuff. Continues to run higher. You get a close outside, 2 legs up, and now you get a second entry short. Notice that makes a new swing low compared to that one. So first entry, second entry, and this actually breaks higher and fails and turns down. Don't enter on the engulfing bar. You could enter on this one after it closes. Such a nice signal bar. Now I want to stop here and clarify just a minute. I've had some people still send me their chart trading an engulfing bar, and it fails on them. And so what I'm trying to suggest is most of you completely ignore engulfing bars until you get a little more experience, because generally an engulfing bar means there's a good chance you're going to have congestion. And you already see some congestion here. You see it. It's a way away from the EMA, and we break out the top and fail and then turn down. But basically what happens on congestion is it acts like a range. It's basically a miniature range, a mini range, or a micro range. And what happens when prices break out of ranges? They usually fail in reverse. In this case, they kind of broke out the high side and failed and turned down, so they'll probably go on out the other side. But it could fail on that side and go back up for one more swing. So you've got to be really careful with these. But with a second entry, with the break and 2 new swings to a new high and a second entry short with such a nice signal bar, I like that one. I'm going to take it. And sure enough, we come back and we test this trend line again. That's just a first entry, but it comes back, makes a triple test, double bottom, and a break above that gives you a second entry long. Now we did have this inside bar, but because this is off this key entry point, a triple test, a second entry, and so forth, if it breaks higher on this next bar, I still like that entry. I wouldn't. It would have been better if it breaks lower, and I would have liked it better. But and then broke higher, I would have liked that better than it just continuing on higher. But I still think with this triple, because there is a triple test, and because it is a second entry, and because this was a pretty decent signal bar that closed pretty much at the same place, if it breaks above that 2-bar matching high, it's probably going to shoot up real fast and act as a trap. And so I still mark that one. You could probably argue for that. I should have probably marked that green and not blue. Let's change that one. In real time, I liked it and felt it was worth the gamble, and so I marked it blue. But looking back at it after the fact here, I probably should have made that green. Wait on and see if you get a higher low off this double bottom, which would also be a reversal and a failed second entry, and you get that here. That's the better place to enter. It takes this one a few minutes to take off, but it does. There's also, you could almost argue there's a triple test here, but you're making higher lows and higher highs here. So I think these are still swings, even though it's working a little sideways. And so for that reason, this is just a first entry. And you see it take off, and it just really kind of sets that trend line. It doesn't really confirm it yet. So I think you have to skip that one too. And this turns out to be a really nice move. And then you get your break here, but you get a first entry and a second entry. But again, the signal bar doesn't qualify, and you get this little move down here with a close outside and new low, but you don't get a signal bar. It's just kind of like that today. Notice you get a first entry, second entry, and you get that little third push up and a big bearish bar. So again, I think you can go short right there. You might wait on a lower high, which I think this is too far for a lower high. There's not much room to that support right across there, so I don't think you can go short there. But this channel runs on down. You get a close outside, move to a new low, and you had a second entry long when it went past this bar. Now I didn't mark this. Now this is an engulfing bar. It broke lower and failed and turned up. Because that's such a bearish bar, and it is a second entry when it breaks above that, you might trade it like that. However, you'd be better off to wait for it to close, and but then it doesn't get a break above it. So, and then you got this bar and you can't use it for a signal bar. So if you didn't enter this on the engulfing bar, which most of you shouldn't, there's no trade there. But if you see this and recognize what's going on here, and plus there's a double bottom there as well, so it gives it a little more merit, and the closes are a little higher as well. Maybe you take that trade. Again, you're better off to wait and see if you get a higher low, which you do, but the signal bar is no good. So once again, there's no entry there. It runs up, you get a new high. That double top, I'd count that as a new high, so then you get a first entry, and then it turns down again and runs up. So when it breaks above this bar, it's a second entry. But by the time, but you can't go long on that bar. You got to wait for this engulfing bar to close, and it looks really congested. So I don't think you want to go long there. If you did, it would have worked, but I just don't think it's. I mean, you got 3 attempts to go higher that haven't made it yet, and so it looks like congestion, and it may fail, and it probably will fail pretty quickly. But it does run up and touch the upper side before it turns down. But notice you get no chance to go short here. And then now you're headed up. You get a first entry and a second entry. I like that second entry short. It's basically a double top. This is already played out. This one's running up. Honestly, you could have played this more sideways as well, and as a failed breakout. There's a couple of different ways to play this one, like so. If you can see that sideways stuff right there. But that gives you a chance to trade back into the range. I like that one. Even with I'm not so sure that was correct. I started drawing it because it fit off those first 3, but I'm not so sure that is a trend up there. I think it's more sideways with a failed breakout. If you drew it, if you were going to draw it, it's probably more like right here, like so. That looks a little better. But it still makes a double top. And if you drew it like this, you may not want to take the short. You may say, okay, but I'll at least make that green or something. So what I like it, I think it's just a failed breakout in the end, and turns down. And of course, you don't really get a chance to go short here anywhere else. You get a first entry, second entry, but again, this is an engulfing bar. And look how crazy it is. It does end up going lower, but it's just a crazy bar. And then you get your first break here and a second entry, but the bar is, I mean, it's 11 ticks. It looks huge. It's not really that big a bar in the big scheme of things because it's a low volatility day, but that looks big for today's bars. And you got to go short right at the lows. So I gave it a green because it's a second entry with the trend, but I think it's a little risky. I'd recommend skipping that one. And of course, now you turn up, you get a close outside pretty quickly, and you run to a new high, and now you got one coming down, close outside. You try to make a new low, and you make a triple test there. That signal bar is questionable. I don't know if you want to call that a triple test or not, but I think it is. It also is a quadruple test of the midline. And so if prices break higher, they're probably going to, you'd probably get a scalp out of that. So I marked it. There just wasn't a lot of opportunity today. You might argue that one to be green. It's close because the signal bar is not perfect, but I still think that's close enough with a triple test. And so, but it runs up, and then you just start working sideways. I don't see anything in there that would tempt me to go short that close to 230, and that takes us on into 230. So you can see it's just kind of a weak trading day. Even though it's a rather good trend here, it's a fairly weak trading day, and there's just not a lot of entries here. So it is what it is. You have to take the good with the bad, and today we had some bad. So, but anyway, I'm going to wrap it up. We'll be back again to do it tomorrow and wrap up our week. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.